Bull markets were never designed to be an easy ride, and we've seen another example of that in the last 24 hours when Bitcoin lost 5,600 bucks from the all-time high to the day's low, but has continued to close in a relatively good position. The last time we saw this was about 2 months ago when Bitcoin also ran into a new all-time high price, and the following day slammed straight back down, losing 4% on the day and a total of $7,000 from the high to the low. And we can look back in history where this continues to happen time and time again. New all-time high, sell off, and then a slam down the following day. We could see from the previous times, the inauguration high, slam down in the day, and then an eventual drop. And again, from that all-time high in December 2024, slam down for a few days after that point. Now we can go back throughout history and look at how this occurs. I think the thing to note from here is what stage of the cycle we are in and whether we're seeing any signs of the overall trend breaking down, because we are at a critical juncture here for the long-term outlook on the cycle, especially being in October of the third year into the bull market, or very close to the third year, which is a time when a lot of people are expecting the cycle top to come in. A lot of talk around the 150 odd weeks from low to high, or you might see it represented as 1,060 days, 1,100 days. All these sorts of things are showing that there should be some top around now or through to December, basically according to history. So any of these sorts of violent movements we see over a 24-hour period are probably going to squeeze a lot of people out of the market. So today's video, I want to go through this, how it's basically perfect timing with some of the other sentiment signals that we've seen over the last 2 weeks, and have a look at where we're going from here. Hit the like, subscribe to the channel if you're new here, plus the reports are going out right now, Tuesday, Wednesday, Thursday, link in the top of the video description. More on that later. Let's take a look at the price here. Obviously now sitting at 121,000. The positives to this move, it flushes out some of the leverage in the game. That's a good thing. And we haven't closed below any previous turning points. So identifying those key levels like we saw with $118,000, that was a big level that I brought up many times on the channel, 117.5, 118. And that also coincided with double top of the interest rate news and the 7-year resistance line that you can see here in the background, this white line here, basically stemming all the way back from 2017, 2021, and it rejected, well, the market rejected at that line in 24 and 25. So now we're almost safely on top of this line. So when resistance flips into support, generally big things come next. So I'm still on the side that we've got some good things to happen to the upside here. And any of these sort of downturns really haven't changed the outlook for Bitcoin. It's basically just flushing out some of the leverage, as I'll look at in just a sec as well. If there were closes underneath 117, 118-ish level, you can see there were the tops, as I've mentioned, and the 7-year line here coming up to about 118. The 50% level of the current move so far is at 116,800. So again, when you average these numbers out, it's about 117,000. Closes under that level, then I would probably expect that we're going to come back down, test these lows, and you could almost say that the game is over from that point, because breaking these lows now, it's kind of come a bit too far to test a lot of these highs at the moment and then come all the way back down to take out the lows. So that could be a cycle ending signal there. But I think that's a lower probability, but a probability nonetheless. That's not how I'm looking at the market now. It doesn't seem like it wants to do that, but there's obviously going to be the bearish sign out there. I'm very much on the long side of the market. Now, if we've got any sort of consolidation above that level, that's great. It's going to keep the market running and eventually break through the highs. Now, when it does break through the highs, the timing of things from this point are starting to get towards that pointy end. We've covered the cycles many times before, looking at each of the prior cycles. So this one here we're calling the Genesis cycle, basically the first Bitcoin cycle, 2010 to the peak in 2013 with the correction. That was the first major bear market that lasted more than 12 months, or on the money of 12 months. This one here was 14. The next couple have been 12, whereas this one here, which was one of the most severe ones, obviously being early days, that was 94%. But it only lasted about 4 months before the market recovered and then ran pretty damn hard after that. So the Genesis cycle, we saw the 37 months into the peak. Then the next cycle, we saw 35 months. So these are basically like your early adopters. Then we saw 35 months again. This is basically from the low 2018 to the 2021 top. That was a November high. And now we zoom in, we're at our 35th month. So very similar to the last two cycles. But the Genesis gives us 37 months. So 37 takes us out to December. So all of these sorts of timeframes are still in play, at least in my opinion, obviously in my books. And I'm potentially even looking out into that first or so week of January of 2026. We know there are some highs that happen around those dates too. Here's Ethereum topping in January of 2018. It still had a pretty sizable move after Bitcoin topped. This is where Bitcoin topped right on that day there, 17th of December 2017. And then Ethereum basically ran from that point for 25 days. You can add in a few more days here for the lower high, basically 4 weeks from that point to the top, still giving you another 100% move before things started to roll over. So I think there's still more time to go here, and I have got those timeframes as mentioned in this chart. Now, the other perfect timing I think that's occurred here is we saw ETFs go bananas on Monday. Look at Monday, 1.2 billion here. And that is the second highest on record. Last week was a significant week. We saw a big inflow there. Talked about that in yesterday's video as well. It was the second highest. So I stand corrected. It was pretty significant for that particular week. But yesterday was the second highest inflow days. And what we've seen around those days where we see a lot of money piling in is at least a local top. So it's essentially, like the old title suggests, it's repeating, it's happening again. We've seen a big pullback from there. And I say big, considering where things have come from. You know, we saw 4% lower down. We've seen another 2.2%. So getting 2.67 at these higher prices is pretty significant, especially when you look at it in terms of a price. Top to bottom, $5,600 from that turning point on the swing chart to that low, $5,400. So still pretty big moves, and especially when you see it from highs. So that's the ETFs also showing that there was some time to slow down here. The sentiment didn't hit extreme greed, so I think that's still a good sign that it's bouncing around in the greed. You can see we're at 64, 63, 70s, and then it's dropped back down to 60. So if we did see another, say, inside day for Bitcoin, where the price just remained in here, or maybe even a touch lower, and then we saw the sentiment drop into neutral or lower greed, that's a good thing that we get a little bit of a reset. Now, you guys that have been following some time, what we don't want to see as well is a 3-day down, so lower highs, lower lows from the top. That would suggest that we'll probably be down for a little bit. If it happens, hopefully that those are the slim probabilities that the signal fails at that time. We've seen it many, many times before where you get 1, 2, 3 days down, and then the markets basically just takes so long to come back. Like it did in December, there was 3 days, and you saw a tiny peak and then a collapse, and then again in March of 2024, there was 3-day down signal in there, and then it ran down for 5 months. So ideally we don't get that. We'll know in about 2 days' time whether that happens, but nonetheless, this is where it sits. Signals are still looking relatively good. And the last one here for the sentiment is the FOMO finder still sitting around balance, right in the dead middle here. So no signs that we've peaked in greed or FOMO, and no other panic or capitulation, pretty much right through the middle here. So everything's looking good there. Now, the altcoins and Bitcoin space in regards to the USDT dominance, still trading sideways here. So we haven't got the breakout that the extreme bull market is looking for. And I say extreme because we want to see some of these like blow off moves for Bitcoin, and any of that sort of alt season coming back hasn't happened yet. I suspect you'll get that below 3.7%. Been saying this now for the best part of a year and change, going back to December, November. So coming up to a year, let's say coming up to a year, because we looked at it as it broke down through here. Needs to get through those lows so that you get the liquidity flushing out of stable coins and back into Bitcoin and cryptos. Yes, they're printing more stable coins. That might be affecting the dominance, so there's more market cap there and holding into the dominance. but we've seen the dominance fall while they're printing more stable coins. Therefore, I think there's still an appetite for some risk on here. Basically, throw out some of that stable coin, start to trade it, gamble it, risk it, whatever you want on the altcoins or Bitcoin. And that's why we still see a drop here for USDT dominance. Keep your alerts set to this low around 4.1%. That could be the first trigger that we're going to test 3.7. And when you combine the stable coins, it also came back to that 6, 7 year support line, this white line that we've got here on the chart. It's been sitting there for a while, sat on that again and bounced. So the timing couldn't be any better. Back onto those resistance levels. The other data that we looked at when it came to Bitcoin is just waiting for this next sort of minor reset, I think, this little rally, and then hopefully a breakdown of those lows. And the total crypto market cap minus Bitcoin and ETH, so your stablecoins and altcoins, also pulled back from an all-time high, still sitting in a pretty reasonable position. So we did have the move up, and then of course the daily correction on that. Your others chart, so now you're getting more into the degenerate space, has continued to fall. This one is breaking support, so not a great sign there for altcoins. You can see the breakdown of 7.7, 7.8%. That's this white line here after it tested 8.3. So it looked like it was going to get running and then failed again like it has done for many, many years. This is the multi-year bear market on alts. But if you're able to trade them long and short, well, you're still going to be making some good gains. That's what we talk about with our members as well, like teaching how to trade these markets. And you can use this skill through stocks, through anything else. You don't have to just be tied to crypto, which is a good thing, especially when cryptos get a little bit quiet. So congrats to the guys here, 500%, 140%, 800%, and long and short Bitcoin through that move up and down. So nice work there, Grum. If you want to check out these results and some of the reviews, link in the top of the video description. We'll give you a link to that free Discord section that you can look at all of this stuff here. Plus, you'll get the weekly reports that come through. Now, we're also seeing an uptick in the 7-day exchange volume, ticking up. Good signs for the bull market that the traders are sticking around. Hopefully, they're making profits. Ideally, that's where you want to be. You want to be on the side of the profits, of course. And once we start to see a breakout, 74, 75, 76 billion dollars on a 7-day moving average, that's probably when you're going to start to see more interest in altcoins coming back, like we saw in this big boom through November. So we're coming up now to 12 months ago was that time when we saw a big boom. When that occurs, just take a step back and have a look at the time frames of how long it lasts. Here is the breakout of these resistance levels here, roughly early November, first week of November. It ran up for 10 days, pullback, ran up again, still high volume, but it's dropping off, still high volume, but it's dropping off. And so let's call it somewhere around a $50 billion area because we've seen some lows here. When it got to 50 billion, that was February. So you're going from November to February. That's 3 months of some pretty, let's call it intense trading there. And then things really died off. It basically just went dead for months. So this isn't just a one-time scenario here for trading altcoins. It happens so often. You can see December 2020, it ran up here to May. So there's 5 months, came back down. There's another month or so. So still more trading, but the market was falling in May and June to those lows. And then things really went quiet after that point. And looking at the chart, it stays quiet more often than it stays noisy. So if you are looking to trade these things, don't get swept up in the often noisy space of altcoins. Stay safe, try to make those gains and hold on to the gains. That's the most difficult part there. Ask any trader trying to hold on to the gains after you've made them. That's the difficult part when it comes to trading and investing. So time frames when things go crazy, keep that in mind for sure. And that will also be a bit of an indicator as to how long the altcoin season will last for. Now we also saw the long-short ratio squeeze get a little bit closer again. So it was quite wide yesterday. I believe it was around 3 to 4%. So something had to give, and we saw that the longs get liquidated to the tune of $500 million. Total was 660 on the day. Pretty significant day yesterday with the longs getting liquidated. Very heavy on the short side, which is kind of unexpected because the shorts were so heavy at that point. Now the shorts have started to wear off and we're seeing a closing of that gap. So yeah, we've got the day down, we've got the liquidations, and the market sentiment is also resetting there. Things are looking like they're just churning through again. Timing to the end of the cycle, MicroStrategy has been a fantastic stock to watch, like we saw with the last cycle. Peaked before Bitcoin peaked. There's November when Bitcoin peaked in 2021. April was also that $65,000 high before Bitcoin collapsed. And February was when things were going nuts. MicroStrategy peaks, comes down, lower high, equal high, and then collapses. This cycle peaks well early. That was November. That was one of the most exciting times for altcoins, November 24. Comes down. All through here, I've marked out all the Bitcoin all-time highs, while MicroStrategy has failed to put in new all-time highs. Now, in terms of timing to the end of the cycle, we've exceeded what happened last time for MicroStrategy. Top to the lower high was 9 months, 273 days, basically 9 months. That time frame came to fruition in August, so about 6 or so weeks ago. But even still, the tops have continued to get lower, and we continue to fail here, which is not a great thing for the cycle overall, meaning there may not be as much time left. Ideally, if Bitcoin begins to rise, will we also see MicroStrategy rise? But at this stage, the probabilities would favor lower highs here. So if we take a look at the time frame to where it's already topped, it actually topped in less time, a lower high, in less time than it did in the prior cycle. Feb to November, 273 days. From this high to this lower high was 235 days. You can see when I take all the lines off, that's 235 days. So I think even though we're looking at, say, October, Q4, maybe even that first week of January, the MicroStrategy trade here continues to fail. What we need to turn around is we need to see closes above $360. So when I take the lines off, you can start to see that nice clear run there. The bottoms, it broke down, and just 2 days ago, it tested it and failed again. So if MicroStrategy can close above 360, then we've got that extra time to, I think, I don't want to say extend the cycle because that's what people are using and it gets a little bit confusing, but maybe it carries on a little bit longer than prior cycles, but you still see a 4-year low to low like prior cycles. So that bear market may not be as long, which then leans in to a left translated cycle forming in 2026 or 2027. So just briefly what that would look like. We see a top, and then we see a fall, and then we start to see a recovery here. Now, it could go to a lower high or a high high. It doesn't matter. The point of it is that the top for the next 4 years is probably going to occur in the left side of the next 4-year cycle. So I haven't drawn this exactly to T or anything like that. Maybe it looks like that, and then that, and then it basically fades out for that period as well. Of course, there's going to be little bumps along the way, but you're possibly not going to see any sort of significant rallies. That's just one idea I've got in mind, and I think we'll know more come 2026, 2027 with this particular top here and the pullback. Does the pullback come in at a higher low and start to trend higher off the back of all of the fear going on in the world with the dollar collapsing and the economy collapsing and money printing having going on, and of course gold going higher and all that sort of stuff? Does that happen and Bitcoin get to rocket through that period as well? We'll have to wait and see. It's just too many years away, and I can't forecast that far when it comes to Bitcoin being through its first real estate cycle as well. So far, things are on track for it. As I said, the US dollar has continued to fail longer term here, continues to wind lower, even though in the short term, we've been expecting a rally here up to around 100 to about 103. So anywhere in this zone here, short-term rallies, and then eventually continuing that decline lower. That's going to be also strong for assets like Bitcoin and gold. And we're also seeing Bitcoin and gold rise while the dollar has been rising as well. Making sure I get my words right there. You can see the dollar's come up from September, so the last 2 weeks has been rising. Of course, Bitcoin has come back over the last 8, 10, 11 days, and gold has been putting in new all-time high prices through that rally as well. So potentially once the dollar starts to pause again and maybe decline longer term, that could even put more fuel onto the fire here for the assets. Now with gold rising so much, 51% so far year to date 2025, this is second only to 1979. Now, if you're unfamiliar with 1979, I think this relates now to Bitcoin as well, of course, being the old narrative of digital gold. 1979, you can see, was this period right here. That ran into a massive peak of 1980. Look at that. There's January, February, and then the decline began from that. Now, I think at the time, most would have believed that gold could not have collapsed. There was a lot going on economically. I think the US was about to default to Mexico somewhere through here, 1981, 1982. Can you imagine that now? It seems impossible, but this is the thing. These were the things that were going on at that time. And notice gold, how it kept going down for just over 20 years. So that's why I still think there is a possibility of a multi-year bear market for Bitcoin. It hasn't done it yet, but just like gold, if it is going to turn into that, eventually you're going to see these sort of things, especially if all these cycles are coming to a head in these next few years, all the cycles I just mentioned there. Now, Bitcoin's a composite cycle here. So we're looking at our predictive cycles on the indicator suite, 2020, 2015. A quick update here for you guys that are following along. If you are, hit the like, subscribe to the channel if you're new. If this is new to you, we're following the 5 and the 10-year cycle. It's nothing to do with a Bitcoin 5-year cycle or a Bitcoin 10-year cycle. This is based on Gann's theory by watching repeating cycles over 5, 10, 20 years. Now, of course, we don't have 20 years of history for Bitcoin, but we've used this on stock markets before to a pretty good degree here with accuracy, looking at the trend of the market expected through these times. Now, this is history that's used going back over 100 years, 120 odd years. And so we don't have any reason to negate it now. And so far it's been working very, very well. This is for Bitcoin, 5 and 10 year cycles on the rise here for October. And you can see the blue line is the current price action. It's been heading up for October, breaking through these highs. And the red line is the composite of those 5 and the 10 year trends. That started to break through late in October, whereas the blue line was started to break through earlier in October through those highs. Now, another thing we can do with the lines is line them up even more closely to the pattern of the market. Here is the pattern, the lows to the lows, and you can see just how clean that trend has been. And if we do line those lows up to those significant points of a collapse that we saw, for example, in March and April when the tariff news came out, that's the blue line here, and marry it up to what's going on 5 to 10 years ago, you can see that it's getting a little bit closer to what actually happened there. And if we have a look what happens after that point, well, November, December continues to rally. That's your Q4 rise. But for the stock market, it's not in a major greed yet either, which is a good thing for the rest of the quarter. But we have been anticipating a bit of a grind here. So you can see the highs through their 5-year, for the S&P 500's 5-year cycle, relatively good. And at the moment, it is also grinding, but grinding higher. So I would say that this is a stronger pattern to the upside. That's what we have come to expect from the stock markets, especially with the AI narrative continuing to take headlines everywhere. Essentially, I've said many times before, I think this is a bit more on the side of the old dot-com boom. We're breaking through the logarithmic highs like it had done in the past. Take this off, just looking at those months. And it can last a lot longer than what people expect. And that's why I have this on here, looking at monthly swings. We're at 6 months in a row without breaking the prior month's low. This can go on a lot longer. Look at even the last bull market before the GFC, 7 months up and then 8 months up. And then of course, you're still climbing higher, but we're just looking at stretches where the market does not break that previous low. That is a very, very strong trend. And into that dot-com boom, it happened 4 times. Breakout, 12 months without breaking a prior month's low, very strong. Some consolidation, that took 1, 2, 3, 4, 5, 6, broke out on the 7th. We had 7 months up, 6 months, 7 months into that top. So very strong trends can occur. S&P 500 performance after October, all-time high since 1950. Essentially, this is just showing the probabilities that we're going to continue to see a strong November, December, Q4, and the year. Basically, when things are so strong, all-time highs in October, what happens next? Well, we can see from the percentage of times here, it is higher 71% of the time for October, 71% of the time for November, 66% of the time for December, 90% of the time for quarter four, and for the year, 100% of the time, it finishes in the black. Essentially profits, okay? 4 or more new all-time highs in October. Here are the averages, medians, higher. The numbers speak for themselves, basically higher every single time. And that, of course, suggests that there is further to go for Bitcoin, more strength in the background here, more strength risk on, more money probably flowing in here. The caveat to that is that Bitcoin typically tops before the S&P 500, but we don't have any signs of even the S&P 500 topping out just yet, so stay tuned. Seasonal favor of a strong Q4, more data points that's showing that quarter four can be strong, especially after you see a strong move in the beginning of October. Average S&P quarter four path when Q3 is up. Q3 was up. Now we've got a greater or equal than to 7.8%. So we're just using a bit of an arbitrary number here, the path to, I guess, curve fit things. I think that's what they're doing here. But nonetheless, the line is what I'm interested in. And it shows, although there is a correction here in October, we've talked about corrections before, October isn't always the easiest month for the stock market. Eventually you start to see those gains come through for November and December. Okay, so that's it. That's gold. We've looked at all of these above. Silver also continuing to hold up here at $48 an ounce. Hopefully by now you can see with this 18-year cycle, we are most definitely in what we're calling here the winner's curse phase. There is still more to go through. Don't expect all the altcoins to go crazy just because we're in a winner's curse phase. I think Bitcoin, ETH, and some of those other majors are basically where it's going to play out for that longer period of time. Yes, there's going to be altcoins that pop off, of course, but we've seen a lot of winner's curse things going on here, especially with these markets heading into new all-time highs, new fresh highs, gold, stock markets around the globe. You know what? The top 50 in Europe hit a new all-time high for the first time since 2000. So 25 years it took for it to get it. And you could argue that, yes, it is all the money printing in Europe, money printing in Japan, new all-time high. Look at that blowing off. That's, I don't know what else you could say to that. 30,000 to nearly 50,000 points. Just blow off tops. Hang in there. It's a volatile ride, and I'll see you guys back in the next video. Like and subscribe, and the links for the reports coming out today, plus Discord as well. You can get access to that. Check it all out. Check out some of the reviews, and I'll see you guys back here at the next video. Thanks again. Peace out.